So for those, yes, welcome everyone to the SheTrades Invest webinar on shameless self-pitch. For those who don't know about SheTrades Invest, it is the investment arm of the SheTrades initiative, which aims to connect women entrepreneurs with the right impact investors, at the same time make them investment ready. I'd just like to take the opportunity to let you all know that the second call for application is now open. So if you are seeking finance, please do apply to SheTrades Invest. You can find all of the information on our webpage, on the SheTrades Invest project page. And also, if you have applied already, we already have you on the database. It is fine, you don't need to reapply. However, if you have done some changes to your business plan or pitch deck or have improved in some sort of way, please do reapply. And we will see then whether your profile fits that of the investors. So now to introduce Ms. Kendi. Ms. Kendi, sorry for mispronunciation of your surname there, but Ms. Kendi Wambia has over 5 years experience in financial management and has been responsible for managing business investments portfolios, facilities to ensure recovery of distributed funds for recapitalization in the subsequent calls for investment. She also identifies investees, capacity building needs, and assists in the sourcing of consultants to close the gap. Kendi is an ACCA affiliate and has a bachelor's degree in finance and accounting from Strathmore University and is currently pursuing a master's degree in monitoring and evaluation for Nairobi, from the Nairobi University. Kendi, welcome, and please share your expertise with all of us.
Sorry. Thank you so much, Letitia.
Thank you.
Hi, everyone. My name is Kendi from Hiba Fund. I'll be taking you through the shameless pitch session today. But kindly, Letitia, help me navigate these slides.
What I'll do is I will put the icon onto your name, so then you'll have the control over the slides.
Great.
All right. So yes, there we go.
All right.
Please let me know if you can change the slides.
Yes, I can now.
Yes.
Great. So welcome, everyone. Let's explore this world of self-pitching and selling your business and selling yourself, because when you approach an investor for funds, as much as you're trying to sell them into the idea of your business, you're also selling yourself as a person that they want to invest in. You're also selling yourself as someone who's reliable and someone who is trustworthy and they're willing to engage in a longer term relationship with you, whether it's in debt or it's in an equity facility. So I'll start off by this first slide, which says that by the 2020, the global social finance market is expected to generate up to $1 trillion in new impact investment capital. So the question today that we're answering is, how do you get a share of this capital? How do you sell yourself to these investors that hold these funds, for you to access these funds and be able to grow your business and scale into the next level of aspiration or ambition for yourself and for your business? So the first thing that you need to be aware of is the various sources of financing for enterprises. And I think a colleague of mine did a webinar on this a couple of weeks ago, like maybe 2 weeks ago. And just to run you through what are the available sources of financing for enterprises, there is debt facilities, there is equity, there is grants, and there is community bonds and funds. And all these things, all these sources of finance appeal to different types of businesses. So if you're a business that's probably looking to maintain most of your control, then you don't want to give out a share of your equity, then debt finance would be what would be most appropriate for you. If you're a business that doesn't mind giving a certain percentage of control, then equity would work for you. Grants are there, but they're limited. and they're very competitive. There's so much competition for grants. They are available, especially for women-led businesses, but also you must meet some certain criteria for the investors in this area. We'll discuss that in the slides below. And then there are community funds where it's like crowdfunding, hosting your source for funds from the community. If your business is not purely a profit-making enterprise, but also has an aspect of social impact, then you're able to access this kind of funds. So there are different pros and cons to these sources of funds. If I talked about debt, with debt you retain control. That's a pro of debt. You also have a tax advantage because at the end of the day, before you pay your taxes, then you've paid the interest expense, which reduces the amount on which you're taxed at, the income at which you're taxed at. So there's a tax advantage with that. There's also easier planning in that once you take a debt facility, you know exactly how much you need to repay each month, what the principal and what the interest is on a month-by-month basis. So you're able to plan your finances better as a business. The cons is that there are certain qualification requirements. So some people will ask for collateral. Some people will ask for you to have maybe certain amounts of revenue. So there's a lot of strings attached when it comes to debt. Equity has a pro of that there is no interest payments required because an equity partner is someone who gives you equity, someone who takes equity from your business is actually invested in the business. So they only get paid if there's any money remaining after you've paid all your expenses. If there's no money, too bad for both of you because then no one walks away with anything. But it's safe in that there's no liability when you compare it to debt. The problem with equity is that you end up giving up ownership of your company and a portion of the profits as well. Grants are usually in generous sums. They are easy to repeat success because once you've accessed grant previously in your business, then you're able to demonstrate confidence for other financiers who give grants, and you're able to generate repeat success in this area of funding. And then it builds visibility and credibility because once you've secured a grant, then definitely there's a lot of due diligence that goes in before one receives grants, and so that puts you on above the line, above the mark kind of credibility level. But the problem with cons is that there's so much research and writing, which is very time consuming. It requires specific writing skills, proposal writing skills, and they're very high competitive, and they usually have a lot of strings attached to them. So you must demonstrate impact or at least be aligned with the objective of the organization giving these grants. So there are some pre-pitch requirements even before you go and present your pitch to your ideal investor. The first requirement is identifying who your ideal investor is. So if you're in the social impact sector and your business not only serves a commercial purpose, but also has some social impact attached to it. So say you help the community with the remnants of the profits that remain in the business, then your ideal investor will be someone ideally in the social impact investing sector. So in identifying your ideal investor, you need to check whether your visions are aligned with that investor. So if you're purely looking for an investor who the arrangement is on a commercial basis, they're out there to make money, your business also doesn't have like a social impact angle per se, then also you need to align with such an investor who is purely focused on the commercial aspect of the business. But if you have a social impact aspect to your business, then also you need to align with an investor who's into social impact and an investor whose social impact objective is aligned with your objective as well. So if it's someone in the education policy, then in education and maybe women empowerment, then you're aligned to that as well. Your business is aligned to that as well. And then you need to be clear on the type of debt that you require. The type of investment that you require, whether it's debt, equity, or grant. and then approach the appropriate investor. Also, you need to understand what level of engagement you want your investor to have in your business. So whether you want an active or a passive engagement. A passive engagement would be, let's say, a debt facility, because that's someone who just invests and waits for their principal repayments and interest repayments at maybe monthly intervals, as opposed to an equity investor who they are now part and parcel of the business, and they probably take up some decision making capacity in the business, and so they are very active. And if you don't want your opinion to be opposed, then this is not the right engagement for you for having an active investor. Then you have to go for the more passive investor types, so like the debt offering financials. Then the other thing that you need to be aware of pre-pitch is whether your house is in order, whether your financial reports, your audit reports, your legal contracts are all in order, so that once you pitch, then and they call you for the next stage, which is due diligence, then your entire house is in order and they can verify everything as quickly as possible. Then you move into the contracting phase. Also, in identifying your ideal investor, you need to determine at what point your investor comes in. So there's some investors who invest in pre-seed enterprises, some invest in seed enterprises, some invest in the growth level of businesses. So you need to identify where your ideal investor invests in, and where your business is at the moment. What level is your business operating at? Is it pre-seed, seed, or is it the growth phase? And then you can approach an investor who operates in that sector as well, so that you're more aligned and you're more aligned to each other. Then so the objective today is, how do you walk away with the investment? So you need to give the investor the necessary information to enable them to see the value in investing in you. And what is this necessary information? You need to show them the past, the present, the future, and it's the future with them on board. So with the past, you can start with your value proposition. What made you start this business? And I've always found out that whenever people are pitching to us, the people that come with a story, an inception story, they are more likely, the statistics show they're more likely to get the investment that they need, because they tell us the story from inception, what need they identified. Probably, let's say, a mother identified that some diaper brand gives their child rashes, and so she came up with a more organic version of it. So from this story, you're able to see the inception, able to see the passion, and you're able to see the commitment level of someone, of an entrepreneur. And so as you demonstrate your value proposition and the reason why you incorporated, or the reason why you formed this business, then you need to start with a story showing where you've come from and presently where you are at now. And mostly this is in terms of revenue, in terms of distribution channels, and geographically. So you could start with, I started my business, let's say, from my house, and now we have expanded. Currently we are like in 3 states, or in 5 different counties. So you show them what the present looks like now and the future with them on board. So once they invest this money, whether it's in equity or it's a debt financing, if they give you, let's say, $5 million, what does the future look like? How do the revenues then reflect this investment on board? So also here you need to be careful, because with a pitch, you don't want to bombard the investors with a lot of information. You don't want to give too much information so that their brains are almost in a short. They're fried and they can't process all this information. The best way to do this is have a short video that shows you talking about the inception story, the present, and the future. And then the future, you can just present it in a graphical format, in terms of currently in 2019 my sales are let's say 5 million, and so you do a graph that shows the 5 million level, and then you show them that after the investment, in the same graph, that my revenues I've projected that my revenues will grow to 10 million. And so you show it graphically, the 5 million and the 10 million. And so it's very quick for them to grasp this information, and it doesn't take too much explaining or too much modes of delivery for them to get this. And so once you're done presenting the past, the present, the future, you need to be very clear on your funding ask. If it's debt, you need to demonstrate that I'm asking for 5 million, and the budget for this 5 million is 2 million is in working capital, 1 million is in equipment, the other million is in new hires. So you need to have a breakdown of that budget, a quick breakdown, not all the way to details of unit by unit, but at least the major asks, the major category of the asks. If it's for equity, then you need to, if you're asking for 5 million, you need to show the stake, the stake that you will give for that 5 million. If it's 5 million, if you value, let's say, your business at 100 million, then you're asking for 20 million, then that's 40% stake. So you have to be very clear from the beginning and from the inception about this funding ask and the budget and the budget in the case for debt. And if it's in equity, then the funding ask needs to match the stake, and it has to be have been calculated early in advance. And then the second thing about how you so it's what the first thing that I talked about was what information do you give the investors for you to secure this investment. The second aspect is how do you present this information to the investor, and then this has a lot to do with you as a person. So you have to present this information confidently. You have to demonstrate reliability, tenacity, and this can be demonstrated even from your inception story. So if you started, let's say, from very humble beginnings and you've made something out of it, then you're able to demonstrate to the investor that this is someone who is resilient and is worth investing in. They won't quit when things are really tough, and then I lose my investment or everything just goes down the hill. They will trust you more when you present yourself as someone who is reliable and who is able to go and hold this business for the long term, and go the whole way, the entire mile. Then so that's in the what information to give. That's the past, the present, and the future. And then there's the how you present this information, and this is on you as a person. How do you come across? And then in the pitch, when it comes to convincing an investor, you need to be very clear about your product and your unique selling proposition. You also need to be very clear about your financials. So you need to have broken down up your financials up to unit costs. So if you're selling, let's say, a handbag, then the unit cost, what it costs you to make this bag, you should have broken this down up to, let's say, $5, and your markup is another $5. So you sell it at $10. So you need to be very clear with these financials and with what your product proposition is, what value you're offering to the market. And then you need to be very clear about the future goals, whether you want to expand geographically, whether you want to open new lines of products. You have to be very clear and demonstrate this in your pitch for them to be convinced that you know exactly where you're coming from and where you're going, and that should not be a risk to their investment. Also, you need to show accountability. This is in the governance of your business. We get, as investors, we get quite shifty when it's a one-man run show, because that means whenever they are sick, then the business is not going on. Whenever they have personal issues, then the business is at a standstill. So you need to show a team behind you as well. Like even if they're not full time, if you consult them on a contracting basis, then you need to show who the people that come together to form this dream that is your business. And then another way to show accountability is if you have audited reports, your financial reporting, and also social impact reporting. I believe every business has a social impact aspect to it, even if it's purely commercial. There's a service that it offers the market, and there are people who work in this business, so their families are fed through this business. So that is also a social impact aspect to your business. So you need to also report on this, on how many families do you take care of in your business, how many kids are going to school, purely and solely dependent on your business, paying the parents who work for you. Yeah. Then the next aspect is when it comes to convincing an investor, you have to have a clear ask. So be sure about how much you need and specifically for what. So if it's debt, then you need 5 million and there's a budget attached to it. If it's equity, you need 5 million and you're going to give the investor 40% according to the valuation. It's not just an arbitrary percentage. It's because you derive this percentage from having done the valuation of your company and coming up with the entire the total value of how much you value your company, and then appropriating this to the funding ask, and then selling them 50% stake of your business for a certain amount of investment. And then you need to demonstrate to an investor that you're able to compete on value. There's some businesses that are more the ones that are more inclined to the social impact. So say they help local women be able to meet their daily needs, and so their value proposition is not that their product is actually unique or of a higher quality. It's because it helps this marginalized, let's say, underserved women in a certain area. It's a good story. It's a good aspect of business. But even with social impact, you need to demonstrate value. Let your business not only be competing based on this what can I call them? Based on this, in quotes, sob stories. Even if you're helping marginalized women, can you make sure that your product is able to compete at an international level? Let the quality be top notch. Let the pricing be competitive in the market, so that you're not just selling stories. Yes, you're helping these women, but also the product that you're giving is equally as good as any other product in the market. When convincing the investor as well, you need to be very clear on the operational aspect of the business. So who is in your team? This is what I talked about earlier, that one woman run show, they're quite risky for investors. You also need to demonstrate your internal processes. When do you source? Are there certain seasons that maybe your sales are higher, and how do you respond to these variations in internal processes? So do you source for things? Do you source for your materials when the sales are when the seasonal, maybe if it's a seasonal business, when the season is not as busy, so that you're able to then concentrate on sourcing, and when it's busy, then you just focus on selling. So your internal processes are also like your bookkeeping. How does your accounting work? And demonstrating this will instill a lot of confidence in your investor, that you know how you are running your business, and there's a clear procedure and a clear manual on how things are run in your business. And then when you're convincing an investor, you also need to show them the potential for massive scale. So these funds that you're asking for, what do they translate into? Do they translate into revenue? Because you can't ask for money if it doesn't directly translate to revenue. So these funds have to definitely increase your revenues. So they have to be either focused on marketing or on cutting costs or on increasing efficiency in some way, so that the investor knows that at the end of the day, their money is going to make money. Also, you need to explain the risks that affect your business, so that you appear open, because every business faces risks. It faces business risks, it faces operational risks, it faces financial risks, and it's good to come out to your investor, your potential investor, and say, actually, this and this might happen, and this might threaten your investment, so that you're on the same page and you can be able to design mitigation procedures together. And then so for the businesses that are in the social impact, that have a social impact dynamic to them, then convincing a social impact investor would be showing them how you're growing the ecosystem. So having an industry sector focus where you're not only focused on your business as like where only your interests go as far as your business is concerned, but also you put in measures and try and reach out to the industry sector as a whole and better it. So that would be a plus for you if you can demonstrate this to a social investor. Then the other aspect is localize the product and services and internal processes. Is the community in which you work acknowledged to the product and services or internal processes? So you have to acknowledge the community in which you work, so that you're not owning the results by yourself. You're not owning the successes as an individual, but you're sharing them with the community in which you work. And then you have to demonstrate long-term sustainability, wealth creation, and the distribution and fair distribution of the wealth in the community. Also, you have to demonstrate social impact. How many jobs are you creating? What are your carbon emissions saved? What is your gender representation in your company and gender inclusion? How many lives are benefiting from your business, basically? And like I said before, every business has a social impact aspect to it, even if it's not purely leaned on the social impact. There are lives that every business touches, and this is a good point to leverage on when you're trying to win over an investor. So now we'll go to qualities of a good pitch. So ideally, you should time it to be very short. Have good. So there are different types of pitches. Let me just back up a little bit. So there's a pitch where you can be invited by your investor, or you've approached your investor and they have ample time, and that's the one that I'm talking about at the moment. And there's a pitch where you either run into a potential investor, or you're in a room full of people and you're networking, and you just need to give them a brief breakdown of your business, and that's called an elevator pitch. And in an elevator pitch, I'll discuss that a bit later. But this is qualities of a good pitch. If you have ample time and you've approached your investor in an ideal situation and you're selling your business to them. So typically the time should be short. You should have good slides. You should tell your story. Like I said earlier, it's good to know. It's good to know where the inception of the business started, and the journey that has been, and where the business is at the moment. And this sells you as a person to the investor. You need to risk profile your business. So just have a slide that talks about the risks that you face in your business that are a threat to you, and how you've come up with mechanisms to mitigate this. So also be enthusiastic and passionate. One will buy your dream if you're not as enthusiastic about it. And then the presentation should be impressive slides. Practice your pitch, of course, dress professionally. Anticipate the questions. You can always know the questions that people want to ask in a pitch. So say your pitch deck. A lot of information, a lot of questions will come from the financial aspect, the financial slide. So anticipate all the questions they can ask and have the answers on your fingertips. And then the other quality of a good pitch is an exit, showing your potential investor the exit strategy. Of course, with debt, the exit strategy is when you finish repaying your debt, then they get their principal, they get their interest, they exit calmly and happily. For equity, the exit strategy has to be designed from the inception, even before they come into the business. You have to show them the avenues in which they could exit this investment from. So you could promise them a buyback, where you'll buy back their shares and at a premium, or you could be getting an initial, like a public offer, a public where you invite the public to buy your shares, an IPO. So then they know they can exit in those scenarios, and they're more comfortable going in knowing that they're not trapped into this engagement in case it doesn't work out, or in case they want to exit. Yeah. and of course conclude your pitch. The other aspect that I want to talk about is what are the outcomes of a good pitch. So sometimes, yes, we go into pitches looking for money, but at times looking for financing. At times you don't get the financing, but there are other benefits as well for a pitch session. I mean that you can get from a pitch session. Possibly, maybe the investor you approach this time does not invest in your line of business or in your sector. Then they can be, from that pitch session, they can be able to point you out to their networks, among the networks who is investing in your line of business. And so this way you can get linkages. If you don't get linkages or the money, you'll learn, you'll know what you did wrong this time. You'll be better prepared next time for the next pitch. And also you gain good publicity because like for us guys, when we invite people for a pitch session, we always advertise and make a lot of PR noise around. These are the businesses that we invited for pitching. This is what they do, and so they get a lot of free publicity and marketing from this as well. And then concluding the pitch, like I said, there's always a social impact aspect to every business. So it's good to say that over and above the financial success that you will deliver to the investor, there's also a social impact aspect to it. You will have employed more people, you would have paid more taxes, and it's good to demonstrate this and leverage on the social impact aspect of your business as well. And then we come to the elevator pitch. So this is where you're talking to a potential investor who maybe you met randomly, or you're at a networking event where they're investors and you just want to get them interested in your business, just to get them hooked so that you can secure a meeting later on, that where you can sit down with them and explain and break down and share your pitch deck with them. But for the elevator pitch essential, just to get them interested and get them hooked, what you need to do is generate interest and build a relationship. So ideally, I mean, an investor is only human. You can't bombard them with so much information and sales and reports and in a 5 minute interval. I mean, in a 5 minute time span. You need to first approach them in a way that they don't feel like they're being bombarded and that they don't feel like they're being harassed to listen to you. So you first generate interest. Maybe start with a story. For instance, let's say the example that I gave about the diaper rash, the diaper that causes rash on a baby. You could just say, actually I've been using this diaper and it's been amazing. And so you generate interest. So what's in this diaper? Like how does it not cause any rashes or any irritations? So then you can discuss. Oh, I use some material that's eco-friendly or organic, and so you generate interest in them so that they keep probing you for more information, and you're not just dumping information on them, dumping information on them. And so you're able to build a relationship this way because they don't feel harassed. Then you need to also demonstrate passion and the uniqueness of your product, because you need, as you're selling this product, you're selling this business to this investor, you're also selling yourself. So they're looking at how passionate are you about this business, how passionate are you about this brand, and how unique do you think your brand is compared to the others in the market. And then the next aspect for an elevator pitch, where it's really quick, because it's always between, an elevator pitch should be 30 to 2 minutes, 30 seconds to 2 minutes. So you need to seek permission to proceed. That's why I was saying, let them probe you for more information. Don't just dump it on them. Let them, you can even ask them, can I proceed and tell you about this diaper? Ask for permission to proceed so that it comes from them and not bombarding them with too much information. And so once you ask for permission, like, can I tell you more about this? So now you can be able to show clearly the value proposition, that this is the market, the business model. This is the market that you're trying to get into, or this is the market that you're servicing. Your business model is this, and what is your unique approach to it? Say, our diapers are organic, there are many brands, but ours is organic, something like that, just showing the uniqueness of it. And then the other thing that you need to tell them is the gross profit and net profit per unit of production, because at the end of the day, whether it's a debt investor or an equity investor, they only get paid if you make money. So these are the two things that it's three things that you need to do: generate interest and build some trust, where you're not bombarding them. Then seek permission to tell them about just these two things: your value proposition, what your business model is, quickly, and then what your gross profit and net profit per unit of production is, so that they know that once you scale your production or once you scale your revenues, then there's, let's say if you're always left with 2 shillings per every product, $2 per every product, then they know once they scale up to 200,000 times, then profits as well multiply by that same 2 shillings or $2 that's always left as your profit. So above everything, remember to keep it simple, memorable, and convincing, and always secure a follow-up meeting and be like, okay, so I've shared with you what my business model is, what my profit is per unit. Can I come to your office and just share more information and just sit down and analyze this further together? And so once you secure a follow-up meeting, you're able to then have a more appropriate setup or sit down where you can share with them all your visions, all your strategies and projections for the future. I think that's it from me. Thank you so much.
Excellent. Thank you so much, Candy. It was really well structured, and able to understand it so well. To everyone else, if you have questions for Candy, please use the chat box, and then we are going to ask our expert what is the best approach or what advice we could get. Candy, out of curiosity, what are the major mistakes that businesses have? Let's say, for example, they actually have a very good business plan and pitch deck and so on, but they maybe they're lacking confidence. Is there something in regards to body language, voice, projection, and so on? That any advice that you could also provide to our participants?
All right. So I have been told that public speaking is not inborn. You learn how to do it, but if you're not able to, let's say, articulate your business visions properly, you can hire someone to do a pitch deck for you, run them through your business, or it can even be one of your staff members who has a gift in being articulate and being clear and concise. You don't have to be the one to pitch your business. As long as the business concept and the business strategy comes through to the investor, it doesn't matter who pitches it, as long as they understand it. So if you feel like you're not ready yet, maybe you feel like you're not there yet to be able to articulate your business well, you can hire or get help from a third party to come and represent you and your business. Yes. But the other major mistake that we've seen investors do, people seeking investments do, is not really understanding their business. So not even knowing or breaking down their cost aspects to the unit level, or breaking down their price points to the unit level, so that they can know what margin that they make, what margin is it that they make from a unit of production. That is always a mistake, because you come off as not understanding your business clearly, and you're asking someone to invest in it, and yet you don't understand it from end to end, or not understanding your processes from end to end, or not being able to articulate a process, because they say what you can't articulate, a process that you can't articulate is not a process at all. So if you cannot explain from the moment the inputs or the raw materials come into your business to the moment you sell and they become profitable, if you're not able to explain that flow, then you don't understand it, and there's no clear flow, and there's no clear manual of how things operate in your business, and that is a risk to the investor. The other aspect is not having a clear funding ask. It's just that you heard that there's someone giving money, and so you just show up and be like, I want 50 million, an arbitrary figure that you've not actually sat down and quantified what your needs are and budgeted for these funds. You just come because you had someone is giving out money. So that's always a pitfall for most people seeking investments.
Thank you, Candy.
Yeah.
Also, we have a question from Ella. She asks, is it with every investor that you have to pitch your business?
That you have to pitch your business to?
Yes, is it every investor that you have to pitch your business to?
Yes, you never know who will buy your idea. So pitch to everyone. If they're sold, then they invest in your business. There's no harm in pitching to the investors. What I'd say is you identify who your ideal investor is and whether they in your sector, whether they invest in your sector. Because if you approach someone who only invests in education and you're in agriculture, then definitely you will get that investment, and it will be a waste of time unless they're looking to diversify their portfolio into the education policy, into the education sector. So I'd say knock on every door, but also be aware of which investors are aligned to your line of business.
Excellent. Then we also have from Say, how do you approach family and friends for investments in your startup project?
Okay, so family friends, it's another ball game totally, completely, because there's it's not a unless you get into a contracting arrangement with them. I think it's more on a gentleman's agreement with family and friends. But you can put it in a contract, get a lawyer, and identify which type of investment or which type of financing they wish to give, whether it's a debt or it's a soft loan or it's free money, it's a grant. So I guess with family, they're not even buying the business idea. I'm not saying they're buying your personal love, but I mean it's a personal relationship. So they might not even be interested in profitability, or they just might want to just see that you're thriving. And so with family, it's a whole different ballgame. Yeah, I hope
I
I've
think
answered that.
also just to add to approaching family and friends for your investment, I would suggest that you make it very clear, or why you need the money and what you're going to do with the money. And because I guess family and friends, they will give based on your view of the business, right? Because as Candy said, you have a more of a personal relationship there. So I think if you quite clear and instruct and say, okay, I need money for my business because of X, Y, and Z, and I'm going to use it like A, B, and C, then I think there would be more keen to give you some money for your business. Because if you're all over the place, if you don't have confidence, then I don't think anyone would actually have confidence to give you the money, because they want to support you, but not it is quite sensitive every time, because then you can have some conflicts and so on. So I think if you're clear and honest from the beginning, you should at least get some support from family and friends. Okay, so we have another question here from Janet. She's asking. I need to try and phrase this because I think there are a few questions here. How about when you're given a set of amounts for funding you are pitching on, but you're parting short? Are you supposed to talk about what the fund will do step by step? Okay, I think that's one question of, should you, once you get the money, should you say what you're going to do exactly step by step? And then I think the other one is, if you already have the fund, is the investor just needs to hear the best pitch? Okay, I think it's something along the lines like, if you have the fund already, the investor just wants to hear your pitch. Janet, correct me if I'm wrong here with your question. Candy, were you able to understand
An
it?
answer to the first part
Yeah.
of the question. So So once you secure, actually, before you even secure funding, you need to know exactly what you're going to use the money for. So have a budget. Say, um, maybe 50% of my funding ask is equipment purchase. 20% is working capital. 30% is new hires. So have a breakdown of a budget of how you're going to use the funds even before you approach the investor. And then on the question of whether you need to explain how you're using the fund step by step, it's good to have milestones. So say, um, let the investor know that once you receive the funding, maybe in the first 6 months, you'll have achieved this set of milestones. And so when they come and let's say if they are doing this is a review or they're just checking up on how you're performing, then they can see that let's say 50% of the funding ask has been absorbed by the business in the first 6 months. So just pace it in a milestone based kind of spending. I think I've answered that first question. Yeah.
Yes, and also then there's another one that, hi everyone, if you could just mute your mics. And then I think there's another one, if you already had the funds, does the investor still want to hear a good pitch? Or if you already had funding, does it still want to hear a good pitch?
I'm not sure I get that. If you already have funds from the investor,
Yeah, it's a bit hard to understand. If I could kindly ask for all of you to please mute your mics, we can hear some background noise.
sorry, Letitia.
Okay. So yes, so sorry
You're
for
breaking up
that.
a bit.
Can you hear me well?
Yeah, I can hear you now.
All right, I just needed to mute some of our participants. Yeah, so the second question, I'm assuming that she's asking if you already have funds, do you still need to pitch?
Okay, if you already have funds in your business.
Yeah, or funds from the investor, do you still need to pitch?
Hello?
Can you hear me?
I can hear you, but you're breaking up a bit. So she's asking if you already have funds in your business, do you need to pitch?
Yeah, do you still need to pitch?
No, because you only pitch if you have a funding ask. So you have a deficit in your budget or you have a deficit in your aspirations. That's when you pitch for new financing. But if you have funds already that are sufficient to run your business, then there's no need to incur either new debt, which you have to service, and also there's no need to get another investor unless you want to liquidate, let's say, a part of your 30% of your business, and then you use that funds to invest in something else. Then that's the only reason why you should then get equity investment and not debt investment.
All right, excellent.
Yeah.
Then we have another question from Joyce. In case of bringing an investor on board in your business, how would you...
Sorry.
Can you hear me? Okay, in case of bringing the investor on board in your business, how would you equate the equity percentage and the amount requested?
Sorry, you broke off in the midway. In case you're bringing an equity investor.
Yes, in case you're bringing the equity investor on board in your business, how would you equate or determine the equity percentage and the amount requested? This is coming from Joyce.
All right. So you need to value your business first. There are various models of valuing of doing a business valuation. Mostly, you can compare with other businesses, let's say that have been purchased prior to yours. What the buying price was for such a business? Then you equate. You can say then, given this business that's almost compatible and comparable to mine that was bought at this much, then I can value my business at this much. And if someone is giving you a proportion of that valuation, then you give them a percentage that's equivalent to that proportion. There are various ways of valuing a business. There's also, you can use the net book value. So your total assets, you say if you have 100 million worth of total assets, then you can say I'm worth 100 million. And then if someone is bringing 20 million, then they only get 5% the business. So you first value your business, then you determine from the funds that the equity investor is bringing how much is attributable, how much value of your business is attributable to those funds.
Excellent. Then
Yeah.
there's a question from Andrea, and she's from Jamaica.
Mm-hmm.
I'm not sure if you'll be able to answer this, but she's asking, is there an advisor that is available to support the SME in ensuring that she doesn't lose her shares or minimum shares?
Is there an advisor? Okay. Well, there are business advisors. I believe in every country. I believe. Locally here in Kenya, we have uh, consultants that you can hire to value your business and tell you exactly how much it's valued, so that if someone is bringing, let's say 10 million, then they get their value. They only get the stake that's attributable to 10 million. They don't get anything more. So there are consultants all over the world that you can hire to value your business. And if they're not in your location, you can always do a consultancy, even across seas, where you, let's say, reach out to someone, reach out to a company that's overseas, and you can negotiate the rates and the terms. But it shouldn't be hard to do a valuation, because there are various formulas that you can even use to value your business and negotiate with the investor that who you want to come on board. And you can agree, let's say, if my revenue is 3 million, I'll value my business 3 times my revenue. And if you negotiate and agree on that, then your stated value is 9 million. And if they bring a million, they only get a ninth of your business. So there are various ways of doing this. It's about how you negotiate with the person who's the potential investor coming on board. And if they're not up to, let's say, valuing your business at a certain times, let's say X number of times your revenue, then you can always get a consultant to actually do the actual valuation, and then you attribute to them what is due to them. Yes.
All right, perfect. We have one more question, and then we're going to wrap up. The last question is from Shinwei. She's asking, please, okay, let me just read this quickly when you get, okay, pretty much she's asking what can she do if she cannot get the correct data of her product target market size? How can you predict your market size when you're creating a pitch deck?
You can determine your market size from the competitor, and well, it's from competitor analysis. It's sad that in some countries, especially in the developing world, there are no bodies that analyze such market. You can't get the exact information on market sizes for different sectors. I know in Kenya currently we are struggling with getting the market size for the local fashion industry here. So the best way to do it, I'd say, is determine the competitors in your value chain, and then prorate to that would be hard, because you can't prorate to the entire population. Maybe just prorate to your local what is it called? Your local area. Yes. So it's sad that there's no existing data on this. Research hasn't been done on some of these things in some areas, but I think you can just estimate. You can't get the exact market size valuation, especially for, let's say, in the creative sector, or for fashion, or for things that people haven't done extensive research on. So I'd work with prorating data from your competitors, who also are not likely to share the information, because I mean, your competitors, you're competing against each other. So that is a bit tricky. But the other way to do it would be maybe from the National Statistics Bureau. If you have that in your country, you can be able to see, let's say, you know exactly who, let's say, your clientele are. If they are urban, they live in the urban area, you then determine the population of people who live in the urban area. If there are people who have specific characteristics, let's say they own a car or maybe two cars, then you narrow down that. And so from the statistics, you can be able to narrow down the population that has these different things that fit your niche. and then estimate what your target size market is. Yeah.
Perfect. All right. Then there's okay, just by the way, there are quite a number of people asking about pitch deck examples. Would you happen to have a sort of example of a good pitch deck?
I do. I don't know whether it's possible to add it, or can I share with you?
What we could do is simply because we have limited time, maybe you can send it by a PDF and I could share it with everyone who's participated today.
Okay, I can share that with you.
Yeah. To everyone's knowledge, asking about the webinar and the PD and the presentation. As soon we will be sending an evaluation form. As soon as you send the evaluation form, we will send the PDF version of the slides and the link to the webinar. And thank you, Candy. She will also send us a example of a pitch deck.
I will.
So I think this will also be able to assist you further on how to create a pitch deck, and also you can go back to get the important points of how to pitch to investors and what to take into consideration.
Yes.
So for everyone, thank you so much for participating today. Just to let you all know that, again, the second call for application for SheTrades Invest is now open. You can go to our project page and apply. Please do apply if you have not applied or if you have done any changes to your business. If you have applied already, we already have you on our database. And for those who are asking about the funds, we match the businesses with the criteria of the investors. So once they select, we will then contact you. But do apply. You never know. Your business might be matching the interests of our investors. Again, Candy, thank you so much for taking the time to be with us today. This was very informative, and from at least from the comments, the women are really happy to have had you today. So perfect. Thank you, and enjoy the rest of your evening, morning, afternoon. And Candy, we'll be talking soon.
All right, we will.
All right. Thank you,
Thank
everyone.
you.
Goodbye.
All right, bye.
Bye.